Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the June 2024 inflation rate numbers and MPC meeting expectation. Last week, the National Bureau of Statistics released the June 2024 inflation report. The report showed a continuous rise in Nigeria's inflation rate. The headline inflation for June came in at 34.19% year-on-year, from 33.95% in May 2024, the highest since the rebasing of the Consumer Price Index used to measure inflation in 2009. The average inflation over the past 12 months was 30%, the highest average for a year on record. On a month-on-month basis, prices rose 2.31% in June, bucking the 3 consecutive months decline from 2.14% month-on-month in May 2024. The increase in headline inflation rate can be attributed to a rise in demand for food for the Salah festive celebration, which drafted the lower AGO prices and relative stability in FX in June. Food and non-alcoholic beverages 17.7% and housing, water and energy prices 5.7%. Divisional items contributed 23.4% to the increase in headline inflation. Food inflation, which contributes about 50.7% to the headline inflation basket, rose 40.87% year-on-year in June 2024 from 40.66% in May 2024. On a month-on-month basis, food inflation rose by 2.55% in June from 2.28% in May 2024 due to the demand during the Salah celebration as well as continued insecurity in the food-producing areas. This can be attributed to increases in the prices of oil and fats, bread and cereal, fish and potatoes. In a similar trend, core inflation, which excludes food and energy prices, rose by 0.39 percentage points year-on-year to 27.4% in June 2024 from 27.04% in May 2024. The core inflation rate was driven mainly by rise in year-on-year prices of these items: house rent, transportation, accommodation services, and medical services. We expect a slight moderation in inflation rate year-on-year in the month of July on the back of statistical base effect, given that the major inflation shocks, FX depreciation and fuel subsidy removal impact, started in July 2023. Also, the rise in food inflation is expected to slow down due to the commencement of the harvest season. As a result, we project inflation rate to slow down to 33.5% year-on-year in July 2024. Ahead of the MPC, the 4th Monetary Policy Committee MPC meeting for 2024 will commence today. Recall that the MPC members voted to raise the benchmark rate by 150 basis points to 26.25% at the last meeting in May. Given the persistent rise in the inflation rate and the stance of the MPC to rein in inflation using the MPR, we emphasize a further hike in the monetary policy rate by about 50 basis points to 26.75% while keeping other parameters unchanged. Investment strategies to hedge against inflation. Amid the unrelenting inflation rate, investors are implored to increase their risk appetite to bridge the wide gap between inflation and returns in the market. Rather than leave your idle funds in your savings account, you can open a high-yield savings account or save with reputable platforms with high yield. Also, you can take advantage of the attractive yields in government treasury bills. Minimum is 100,000 naira in the secondary market via some investment outfits and banks, as well as commercial paper with a good credit rating. Additionally, investment in dollar-denominated assets will also provide a hedge against inflation due to the persistent depreciation of the naira. Investors with high risk appetite and long-term horizon may consider investment in Nigeria and US stocks with strong fundamentals. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.